All right, now let's go ahead and talk about different trading styles. This is the most important part because you want to try to figure out what sort of trading style you want to do, what you want to take on. For me, my strength is day trading because I like to be in and out, but I'm going to explain all the different trading styles and then you can decide what you want to do from there. All right, and there's different ways, of course. Long-term trading, I also do long-term trading because I want to build wealth. I want to continue to build my money. And I'm just going to tell you guys what I do, especially when I make profits from my day trading, and how I use long-term trading as well. All right, so long-term trading, that is anywhere between 6 months up to 5 years plus. All right, you want to put your money into a certain stock and then let it grow, from 5 years, 6, 7 years, however long you want it to grow. Short-term trading, that is anywhere between 2 weeks and 5 months. That is what you call short-term trading. Swing trading, that's anywhere from 2 days up to 1 week. Nothing past 1 week. And then, of course, day trading, you place a trade within that day and you are out the same day. So if I place a trade today, I'm out before the market closes. Things to look for when trading long term. All right, long term trading, investing, that's what you call investment. When you want to be an investor, you want to put money in a stock and you want to trade it or hold it for a long period of time. So things to look for. You want to look for a uptrend, and I'm going to talk about uptrend. We're going to look at uptrends. Okay, uptrend is when you want to buy a stock, right? You want to see a stock that's doing strong. You want to see it every year. It's growing. It's getting higher and higher. That is what you consider a uptrend, and that is a stock that you want to possibly put your money in and know that every year it's going to give you some sort of return. Downtrend, that is when a stock is basically going down and is really not going up as much as you would want it to. And you can also make money on a downtrend. Okay, that's when you're going against the stock. You're betting that the stock is going to go down, so you want to start selling stocks. Okay, and I'm going to explain all of this right now. I just want you to put in your mind that for long term, when you want to put your money in a stock, you want to look for either an uptrend. When you want to buy, you think the stock is going to go higher, you want to put money in, boom, it gives you a return every year. And then downtrend, if you think that the stock is crashing, it's not doing well, you want to bet against that stock. So when you are looking at a stock and it's going down, you see that the chart is slowly, like, it's going down, and we're going to look at a live chart. When you see that the chart is going down, that is something you do not want to put your money in. That is something you do not want to buy, right? You don't want to buy and think that it's going to go up, because clearly it's going down. Okay, you don't want to go against the grain. The big companies, they're not going against the grain. You want to go with the flow. All right, your little 2,000, 5,000, whatever, your little money ain't gonna change the direction of the stock. All right, you want to go with the big boys. Simple rules. We're gonna look at live charts so that we can understand exactly what I'm talking about. Gaps. I love playing gaps, and I'm gonna show you exactly what I'm talking about. Right now, I want you to focus on what's part of a long trend, so that if you think it's something you want to do, all right, we'll go for it. All right, things to look for. Short-term trading. Once again, we have uptrend, right? When buying, you have the downtrend. When shorting, going against the stock. We have gaps. All right, I'm going to explain exactly what gaps are in a stock. We have support and resistance. For some of you who have a little bit of experience with stocks and trading, you know what support and resistance are. We're going to look at that briefly, okay, so that you have a clear understanding of what that is on a live chart. And then we have the RSI and the EMA. Okay, we're going to look at all of these things on a live chart so you know exactly what I'm talking about. Things to look for when swing trading, when placing a swing trade. Okay, you want to look at the strength of the market. Is the market doing well, or is the market is bleeding? You want to look at the 1 minute VWAP. You want to look at the RSI. Is it oversold or undersold? And once again, we're going to look at that. Okay, right now these are just terms that you want to put in your brain so that when we do look at the chart, it'll make sense. It'll click. You can always come back to this video. My favorite, what I love to do, I love to day trade. Things to look for. That is the 1 minute VWAP. 1 minute VWAP. Okay, it's an indicator that you can add to your chart, which will tell you exactly what's going on. 1 minute VWAP, that's all we need. And of course, we're going to look at some things and look at some live trades and stuff like that. So once again, if you follow me on social media, Instagram, Facebook, you see that I love posting to show you guys that I'm following my rules. I know what I'm doing, and I want to make sure that you guys know what you're doing before you start trading money. And I want you guys to make decent money, right? $500 every day. I know that will go a long way. We don't want to get ahead of ourselves, but we want to take it slow. And once you get your foot in the game, once you understand, maybe it'll take about 6 months, because trading, looking at the market, you have to look at it like consistently, knowing what's going on. You can't really learn something just by reviewing something once. You want to continue to look at it, continue to pay attention to the market and stuff like that. So let's go ahead and continue. All right, this is a uptrend. Fall under the long-term and short-term category. We're looking at Apple right now. Remember, I told you guys how to look at a certain chart, how to put in the symbol. All right, we're looking at Apple, and this is what I'm talking about. Long-term, okay, or short-term. You have a stock that's growing and growing and growing and growing. It's not going down. You see that the price was at, let's round it about 115. Yeah, let's say about 115. 115 right now is trading, or was trading, at 180. All right, this is what an uptrend looked like. It's going up throughout the year. You see that it's giving you a nice return throughout the year. All right, nice return going into 2022. If you would have put some money in here, it would have given you a really good return. You want to put your money in a stock that is strong, that is stable, that looks good. So that is what you want to look for when you want to identify an uptrend. All right, let's look at the downtrend. This is what we call a downtrend. It was trading up here. What is this? We're going to call it 180. Let's say it's 180. Trading up here. Slowly but surely, we're just going down. So if you would have put your money in a stock that looks like this, let's say you put money in here thinking that it's going to go up. All right, why go against the grain? Why are you going against the big boys, the big dogs? Slowly dying, slowly going down. You do not want to mess with this. You do not want to mess with downtrend unless you know exactly how to sell the stock, which then you can make money when a stock is indeed going down. All right. Gaps. I had to show you guys what a gap is. So this candlestick, right now we're looking at the daily chart. And this is Dick's Sporting Goods, DKS. Looking at a daily chart. All right. This candlestick, let's say it closed here, and then the very next day it opened way up here. You don't see any candlesticks right here. These are shares that are left alone, basically. So it gapped up way up here, but these shares must be filled. So what happens later on in the month? It filled up. So boom, we know that gaps are a good gameplay if you wanted to trade gaps. If you see a gap that needs to be filled, you know that is going to fill later on in the year. And yeah, look at it, boom, filled. So if I was trading this, I would probably put a short somewhere over here, betting that the stock is going to go down. All right, betting that it's going to go down because I know that it's going to fill this gap right here. And I would have taken my money out right here. So gaps, you can use it as long-term trading, especially when a stock goes down, gaps down far enough, and you want to buy, and it's going to take some time for it to grow. All right, this is a fast gap fill. Sometimes it's going to take months, maybe a year or two to fill up a gap. So that's why I say it's considered long-term and short-term. So this is Dick's Sporting Good. We can look at some more. We got Dollar General. Let's look at Dollar General. All right, let's look at Dollar General. Gap right here. This is a gap fill. Gap right here. It went down. See, it takes some time, but eventually it goes up here and it fills eventually. Right? Boom. It filled up. It covered the shares that were over here. All right, this is what you call a gap fill. It filled it up all the way right here. Okay, so if you would have bought this share maybe somewhere over here, so if you would have bought some shares maybe over here, but eventually it will get filled. All right, let's look at another one. Beyond. Let's look at Beyond Meat. Let's see, where are you? All right, Beyond Meat. Ooh, we had a few gaps, right? Gap right here. I know that's gonna fill, so I would probably would have short somewhere. Boom, it got filled right here. So I would have held this for a few months until it got filled. And also look at this, downtrend. Okay, so boom, short. And if you wanted to go against this stock, you would have made really good money. This is a downtrend. Another gap right here, boom, right? Short-term trading, short-term. You would have bought down here, somewhere over here, knowing that it's gonna fill. Boom, once it got filled, you would have been out. You would have been out because this is a downtrend. This is not something you want to hold. You don't want to buy down here thinking that it's gonna go all the way up here. No, you fill that thing and you get out. That's it. Another gap right here. Eventually, so far it only got just this much, but eventually it's gonna fill up. All right, we're not in a reversal yet. When this stock starts to reverse and start to, you see a little uptrend, starts to go up, then you want to buy and hold. But as of right now, once it fills here, you want to get out. All right, you want to get out of this stock. All right, so that's Beyond. Let's look at another one. We're going to keep looking at some charts and we're going to keep looking at examples so you know exactly what we're looking for. All right, let's look at Uber. Uber is another one. All right, we have a gap right here. What happened? It got filled. All right, it got filled. Eventually, it got filled. We would have been out. We're done. Few months. All right, what is this? October, November, going into December? Yeah. Boom, we're done. Short-term trade. We're out of it. We don't want to look at this stock anymore. Okay, that's how we play. This is what we look for. This is what we do. All right, we can play gaps. I know a lot of traders, they love to play gaps. Now, it's not always 100%. Sometimes it's going to take a long time. Sometimes it may not get filled. But for the most part, majority of the stocks, they do get filled. All right, let's look at another one. All right, we have Roblox, RBLX. Let's look at Roblox. Where's my Roblox? Boom, Roblox. Oh, look at that. I'm in this trade. So, boom, gap. It gapped up. And all of this needs to be filled right here. Okay, all of this needs to be filled. Went up. You would have held it for a couple of months. Boom, you're out. You are out. It filled all the way down to the T. Look at that. Filled up. It filled it up. Down to the T. All right. I have a nice put on this. Down to the T. And I'm out. That's it. Done. All right. That's a nice short-term play. Let's look at another one. Let's look at Amazon. Amazon, very popular, expensive stock. Currently trading at 3,000 plus. We have a big gap. Look at this, 100, maybe $100 plus. It's $100 plus fall. I love trading Amazon. I love trading Tesla. I mean, these stocks, they just move. Give you a lot of money. So boom, fall. You would have bought somewhere over here, and I'll tell you exactly where or what to look for when you want to buy. We're gonna talk about these little EMAs. All right, little EMAs. But right now we just focus on gaps. This is a gap right here. Falls down, goes up, almost fill all of it right here. Now sometimes they only fill halfway, but this one here eventually, especially with an Amazon stock, a stock like Amazon, how powerful, how strong it is, you know, most likely you want to go with the whole fill. So boom, it filled up. You would have been out somewhere around here. It went all the way up here. All right, and then it fell down. So it's very important that if you play in the gaps, you get out once it fills, because it'll fall right back down. But when it falls back down, you can get right back in down here and wait for that nice return. So Amazon is a strong stock. They're doing great things. I got some shares of Amazon, got some shares of Tesla as well, but I'm just watching it. All right, so anyways, this is a gap fill right here.